where is it that you find uh, undervaluation, lower velocity of conversation, which may lead to some bit of outsized gains relative to the other gains over in equities or otherwise?
See, if the government decides that the PSUs have to deliver returns to the equity investors, clearly PSUs are undervalued at this
Hmm.
point of time.
But
Uh,
they have been for a while,
they have been for
and
a
the
while.
government has been talking about this for a while, but it's not quite resulting in.
Yeah, so it depends on the resolve of the government in this area, clearly. Otherwise, we are at a stage where we are neither in extreme greed, neither are we in extreme fear. We are somewhere in the middle at this point of time. So we are not in a situation where we can say that, you have extreme greed, so you have to be very cautious. You're in extreme fear, so you have to be extremely bullish. We are not in that kind of framework at this point of time.
Okay.
Whereas if you look at certain markets in the world, like for example, there are so many geopolitical worries involving China and Taiwan, for example. You have so many problems which are surrounding Europe at this point of time. So those are all areas where I would say there's much more fear at this point of time. India, because of the way it has been managed, has lesser problems, and therefore I would say we are not in that extreme greed of fear. In fact, the premium India is one of the most premium valuation at this point of time
True.
compared to any other country in the world outside maybe US. So that's why it's very difficult to make a case that India is in extreme greed or extreme fear at this point of time. And that is a challenge when we are doing this conversation. But we have to give credit to the government for managing the macro very well, because this has not been an easy period to handle macro,
Sure.
because you are at a stage where crude has been high. You've had COVID to manage. It would have been not the easiest time, if you had done too much of
Stimulus.
stimulus. It hurt. Any of the countries which did too much of stimulus is suffering. So the combination of how the central bank and the central government handle the finance is why we are in a good situation. The reason why we are able to say we are neither in extreme greed or extreme fear comes out of the good macro management at this point of time.
Yeah, come to think of it, and the brickbats that they received from a lot of people around the lack of stimulus back in 2020. Yeah, so you can agree. I mean, they stuck to their guns quite admirably. Uh, Naren, may I ask you, therefore, and the last couple of questions on this conversation? There is a belief in certain quarters that if 2010 to 2020 was a decade of consumer facing businesses doing well, B2C ruled the roost. B2B, save for IT, no matter how hard it tried, didn't quite succeed. But there is a feeling that B2B might make its advent in a meaningful way in the current decade. Do you agree with that, or do you believe it will still be B2C?
No, no, clearly I'm a believer that manufacturing, exports, these are all themes which are likely to do well in the next decade. Because if you look at the B2C segment, barring a sector like telecom, most of them are priced as though there will be continued growth for the next 10 years at a high level. Whereas sectors like manufacturing and export, many of the exporters, they're all priced for much lower growth. And as equity investors, we love to invest in sectors where the implied growth assumptions are much lower. So clearly, B2B segments are much more attractive for the next decade than B2C segments. And B2C segments are already priced in for growth. They may continue to do well,
Hmm.
but then the valuations of many of those sectors are already pricing in the growth.
Got it. My final question, and that is, if we look at B2B, or if we're looking at the manufacturing theme, there are a lot of question marks being raised around how some of the winners of the exporting theme in India, which have done very well in the last 5 years of the previous decade, are now either facing business headwinds or valuation headwinds, or a combination of both. It could be IT, it could be specialty chemicals, a bunch of others, and some smaller themes like textiles or paper or etc. are coming to the fore. What is your sense on the tried and proven export champions of India, which have this argument around valuations or business headwinds?
See, as a valuation conscious investor, I would say you have to be valuation conscious. So, if the some of the sector implied valuations become too high, you go in search of sectors where the valuations are more reasonable and where the implied growth assumptions are much lower, and choose those sectors. That would be what we would do. But broadly, I would still believe that even demographically, India is in a much better position at this point of time to focus on B2B. And that is how I would say, because many of the countries today have a demographic crisis,
Mm.
whereas India is one of the few countries without a demographic crisis over the next 1 decade. So I believe that the opportunity is very much there. I, there are sectors in the B2B domain where the valuations have expanded, but there are sectors in that domain where the valuations are still more reasonable. So I would say that we have a good mix there, and we have to choose the right sectors and the right stocks to make money over the next decade.
Okay. But a decade that will largely belong to multiple asset classes as opposed to only equities in the previous decade.
Yes, that is my clear view at this point of time.